I'm Charlotte McLeod with the Investing News Network, and here today with me is Byron King. Byron writes the Lifetime Income Report for St. Paul Research, which is part of Agora. Thank you so much for joining me today. Great to see you in person.
It's great to be in person. Thank you very much, Charlotte.
Yeah, so nice to be back. We're here at the Rural Symposium in Florida. Hopefully it's going well. Maybe we'll start with a question on sentiment down on the floor. How's it feeling for you?
Sentiment on the floor is positive at, I would call it like a tactical level, because the companies are very strong companies presenting here. We have really good companies, great assets, great management teams, cashed up, doing good things, doing everything you're supposed to do. Other sentiments at sort of like an operational or strategic level are nervous. Yesterday the Fed raised interest rates, which everybody expected, of course, and today the official word came out that we're two quarters into a GDP decline. So technically we went into recession, today. So people are looking, thinking, rising interest, recession, what does this mean? Much of America's wealth is concentrated in, very high levels of the society. I mean that in terms of economic, not that they're high class people, a lot of them aren't. But when the stock market goes down, a lot of rich people start to feel poor, and they too cut back on their buying. So it's not just the Walmart shoppers who are shopping less and buying less, and it's people at the high end. And so there's, tactically in terms of companies, resource companies, we have really great companies here, lots of positivity. I would say operationally and above, people are nervous about, where's this all going?
Yeah, I think that's a very accurate assessment of how the sentiment feels down there. And, all this talk about recession, I think, ties in well to what I want to talk to you about today, which is copper.
Copper.
So we often hear it called Dr. Copper because it's a bellwether for the economy. So we have, as you said, recession officially today in the U.S. We had the IMF, I think, earlier this week saying something along the lines of we're on the edge of a global recession. So what does that all mean for copper in terms of demand?
Well, obviously, if you follow the price of copper, you notice that it's declined recently. The thing is that if you follow the fundamentals of copper, you know as well that, if you forecast it out, in terms of a year, 2 years, 3 years, 5 years, which will take us through, recessionville, we hope, there's not enough copper. Big older mines are played out, big South American mines in Chile, Peru, what have you, played out. They are in terminal decline, and there are some new discoveries, some new developments, not nearly enough. It is an underinvested sector for the last, let's say, 15 years in terms of how much money went into exploration, how much money went into development, and certainly how much money did not go into building mines. And so there's a lot of catching up to do. So the people who own copper and who are, focused on the plan, execute the plan over the next 3 years, 5 years, 7 years, they're going to do very well because they're going to have a mine making copper, selling it into a very strong demand world because the world is electrifying in so many ways.
Yeah, this is exactly the point I was going to make with the demand. We just need to keep looking at that longer term picture with the green energy future. When we look at supply, you mentioned Chile and Peru, these are the powerhouses of production. Will they continue to stay at the top, or are we going to see a shakeup there in terms of where mining happens for copper?
Oh, both. I mean, the South American plays are there. I mean, the geology is there. The politics is not. We are looking at fundamental changes, societal changes at the constitutional level in in a place like Chile, for example, and then other just very, very difficult political situations in a place like Peru, as well as many other places. But they are not, shall we say, investment destinations for a lot of big money right now. And when you talk about building copper mines, you're talking by definition about big money. And when you also look at where is the big money looking, it's looking at safer jurisdictions. I spend a lot of time in Canada. You and I know this. We've talked about this before. There's a lot going on in in different parts of Canada, certainly in the Yukon, big place up there, and even back in the USA, back in the Western United States, Arizona, Montana, a couple of really big copper projects in the cards there. Again, the United States isn't exactly the world's great mining jurisdiction either, considering cost of money, cost of everything, regulations, what have you. But you go where the metal is, and that's that's the story. Although, let me see, just one more thing, the rest of the world is building big copper, big things that use copper. Belt and Road Initiative, China, connecting Asia and Africa. Lots of road, lots of rail, lots of airports, lots of telecommunications. Lots of copper. So.
Right, and can we talk a little bit about companies and how investors might want to approach copper from a company perspective? Because I think I remember maybe back a year or two ago you were saying maybe for copper you want to focus on the larger companies just because how the cycle goes, and if you're a smaller company, the cycle is coming kind of right now, so you might not be ready. Does that still make sense? Do you have any updated thoughts there?
Well, it depends on where do you want to be as an investor. I mean, if you want to go for, sort of industrial and stock market safety, even though it's a tough world out there for stock markets, just with talk of recession. I mean, the big players, a company like BHP, they're out there, they're in business forever. They're not going anywhere. They're going to be around. If you want to look at companies that are very, very strongly strong technically and are just in a very sweet spot. I mean, an advanced developer, for example, like Western Copper and Gold up in the Yukon, which is a massive deposit just waiting to happen. They're waiting for some big company to pull the trigger. The problem is that big companies have trouble pulling the trigger because there's so many people, within the companies who have to have a bite at the project, before they can do it. A big company, Rio Tinto, for example, they know they need to make acquisitions, but they've got every time they want to do something, somebody comes in, there's a new ESG rule, or there's some new cost of money issue or whatever. It has to do with decision making at high levels. Doesn't mean that the companies that are going to get acquired, doesn't mean that they're any less good. It just means that they haven't got bought out yet. Western Copper being one example of that.
Right, and what do you think is the trigger for those big companies that know they need more deposits to start pulling the trigger there? Is it a higher price? Is something else?
Well, everybody likes to see a high price. I think what really is going to drive the process is it has to do with what they call reserve replacement or resource replacement. Because every day that they mine their existing mines, every week, every month, there's less pounds in the ground, so and every quarter, they have to report, they file their statements, and this is how much is left. Well, at some point, their resource base is drifting down. You can only add so many pounds, so many ounces, whatever, just by drilling at the mine. At some point you need a big whack that will move your needle. And the way to get a big whack to move your needle is to go out and find a nice, well-developed, technically proficient project, good geology, good people, good resource base, good everything, and you buy it and you add it and it's accretive,
Right.
There you go.
Yeah, well, and I guess we should be looking for projects and mines that work at whichever price. But is there anything that we can say about the price? I was going to originally ask about price in 2022, but it really seems like we should be talking longer term price direction for copper based on what you're saying.
Well, yeah, the supply is fixed. I mean, you pretty much know, if you're a copper follower, what the supply is going to be doing for the next, 6 months, 12 months, 18, 24, because those mines are there, those projects are there. I mean, maybe a little bit of tweaking at the margin. Somebody adds another line at the, down at the mill or something like that. They can add, but in terms of any more, big copper projects, I mean, they know where they are. People know where they are. So the supply is what it is. And in terms of demand, though, I mean, you've got your issues with the recession, you know, coming on, but the recession in Europe and North America is going to matter a lot to the people in Europe and North America. But Europe and North America don't use nearly as much of the world's copper as the rest of the world is using. You know, the biggest user of copper is China. I'd say one angle on that is that, you know, China has immense financial problems. They have huge banking problems. I mean, if you follow China, you've probably seen the stories of, you know, people rioting over not being able to get their money out of the bank. They've got tanks on the street, some, you know, kind of, you know, patrolling the streets to keep these doggone depositors from, you know, smashing the windows of the banks because they can't get their money back. China has an issue. If China's economy somehow collapses, good luck, you know, good luck with that, because there goes your copper demand. I don't see the Communist Party of China allowing it to get to that point. I say that as a matter of, you know, just sort of as a matter of observation, not as a matter of ethics. You know, they will do what they have to do not to let, you know, bad things happen. Meanwhile, China as a copper user is big and getting bigger. I mean, they're still building. The biggest auto production system in the world is China, the biggest auto production complex. And what is China? China is the biggest electric vehicle, you know, maker. So there's a big whack of demand right there. Let alone, you know, the wiring that goes into buildings and all the microwave ovens and the refrigerators and all those, you know, empty apartments that they're building across the country. But you know, there's your real copper demand. You know, I mean, in the United States, we sort of replaced microwave ovens. In China, you know, people are getting their first microwave oven. So there's a difference in, you know, what kind of copper demand you see.
Right. Well, and that's good, because usually I do like to ask when we're talking about these bullish scenarios, what's the thing that could throw it off track? And you've laid that out quite nicely. I think as we're wrapping up, are there any other thoughts that you would share with the investors right now, either on copper or otherwise, things that are on your mind?
Well, it's been, you know, boy, it's been a...
I'm sure there's lots of things on your mind.
Lots of things on my mind, yeah, for sure. You know, you look ahead, and, you know, technically we're in a recession in the United States. Politically, we're in recession denial. You know, because I mean, we've got people in the administration saying, well, maybe we'll just change the definition of a recession. You know, we're not really in a recession. Well, it's going to become much more apparent, because, you know, denying reality doesn't make it go away. You know, bad news does not get better with age, as an old expression goes. You know, and so we will see sort of how long this thing drags out. I mean, right now, you know, we have high inflation because gasoline and fuel and food prices went up. Housing went up as well. Looking forward, we might wind up in one of these recessions where not only is fuel expensive, food expensive, and rent is expensive, but a lot of people are losing their jobs as well. You see that going on out in the economy. So, that's going to keep dragging the stock market down. And it doesn't matter how good of a mining company you might be. It doesn't matter that you're pulling out cores that are solid copper or, you know, solid gold. You know, I mean, that doesn't matter if the market is just decides that it wants to tumble. So, you know, be wary along those lines. At the same time, if you are a resource investor, right now there are great companies out there that have done terrific work over the last 5 years, 8 years, 10 years to be where they are in terms of technical proficiency, in terms of the geology, in terms of the workup of the deposit. And going forward, those resources are going to be valuable. I mean, the dollar is inflating away, and, you know, so you know, but elemental copper, elemental gold, elemental silver, that's not going anywhere. There's not enough of it, and in the world to come, those kinds of things are real and they're going to be valuable.
Okay, I think that's a great point to end on. This theme of patience, I know that people struggle with, but I think it's so important to remember. So thank you for coming on to talk about copper and what's going on.
Thank you very much. Good to be with you.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Byron King.